Evergrande, 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 the name that has been on everyone's lips the past few days. Many analysts, newscasters, YouTubers have all found different angles of which to cover this story. I thought I'll take another step and look at it in the point of view of a value investor. Would I have bought this stock 6 years ago in 2015? Hey investors, welcome to The Market Talk. My name is Ali, I am a value investor and a proud graduate from VIA. And today, I would like to bring to you the Evergrande story, but in the point of view of a value investor. Now, I know what you may be thinking. Does this concern me and hasn't enough been said about this company? Well, firstly, it does concern you. Evergrande got quite a bit of its loans through Chinese and international banks. Singapore banks are not spared too. MAS, Monetary Authority of Singapore, is now asking local banks to own up if they have any exposure to Evergrande. The biggest loser to an Evergrande fallout will be homeowners and creditors of Evergrande, but the spillover may be regional and our proximity to Evergrande needs to be studied closely. Secondly, it may feel like so much news has been rolling around that there is nothing left to mention about Evergrande. I feel that what many people have missed is the idea that it is easy to be a guru analyzing the downfall of a company when the news is out and hot. But are you wise enough or have a system that is strong enough that you would have avoided this company in the first place? That is the question I want to answer. So, what I want to do is to use the financials starting from financial year 2015 and work my way back to 2010. I will analyze this company pretty much how I would my other stock selections. The ticker symbol is HKG3333. The stock is listed in Hong Kong. So, without much further ado, let's begin. Let's start with the business model. Okay. Frankly speaking, if I had just analysed the business model, I may have already stopped. Evergrande is a property developer, second largest in China, no doubt. However, usually in any company's analysis, we want to know what the company makes, how much it sells its good for, and what is its profits. For example, let's take Coca-Cola. It's a simple company to understand. They mainly sell drinks, earn profit, and then sell more drinks. For Evergrande, however, things are not so straightforward. Plainly speaking, you may say that they buy land, develop buildings, sell the properties and earn money. But it's not so simple. One thing I know is that property developers mostly work on credit. The complication comes when you want to start determining what counts as revenue, where is cash coming from, what are its land reserves, and who are the company's creditors. Looking at all these things can get confusing, and for someone like me with super little understanding of the property market, I couldn't even understand where the revenue comes from. That said, they did present a chart showing investors which properties they own in China, which properties are being developed, and how much land reserve they have. In terms of assets, the company has considerably large amount of it. What I can say is that based on their annual report in 2015, the company launched 81 new projects, collected sales proceeds of renminbi 152.3 billion. They launched 3 new senior notes or bonds. One bond was even listed in Singapore. They reduced costs by carrying out standardization projects, whatever they may mean. Completed acquisition of another company called New Media, which they changed the name to Evergrande Health Industry Group Limited, and partnered with Tencent in acquiring the shares of Mascot, another company. They also successfully listed on the stock market a football club. The company is called Guangzhou Evergrande Taobao Football Club Co. and Limited. Lastly, they also managed to list Evergrande Culture Industry Group Co. Limited. It's a company that operates cinemas. Phew! With so much to unpack, I would have just given up. Basically, this company is not in my circle of competence. However, I'm going to be very lenient and assume I am a genius able to understand everything that Evergrande does. And I'll also assume that things are all rosy. They take money from the banks and bonds, they erect buildings, sell those and make a profit. Okay? Now let's look at the figures. Let's start with debt. I'll start over at the biggest flaw in Evergrande's life right now. We can study the debt to equity ratio in 2015 and see that it is way above what a value investor would pay for. I like my ratio to be below 0.5. Now the debt to equity ratio is clearly above 0.5. In fact, this ratio has been unbalanced for the previous 5 years. We can see that from 2011 to 2014, they were reining in their debt. But with the launch of new bonds, they shot straight up again. I don't know if developers usually handle this much debt in the first place, but I had a look at Evergrande's rival, Country Garden Holdings Co. Limited, ticker symbol 02007. It seems even they hold considerable debt. Their debt to equity ratio also goes higher than 0.5. So I think it's a property developer thing to hold on to debt. Fast forward to today, however, we can see that this was Evergrande's Achilles heel. I think Evergrande is in hot soup for not being able to pay it back. And as an investor in 2015, I would not have been able to deduce how Evergrande gets debt and pays it off. So not only do I have no circle of competence, I don't know how it manages its debt. Next, let's look at revenue and income. Now looking at the revenue is where I would feel some confidence in putting my money into this company. From 2011 to 2015, we can see that the company has been increasing its revenue base. Frankly, if I was the CFO or the CEO of this company, I would be selling my revenue chart as advertisement of my company in every newspaper in China. Sometimes, painting a nice story with revenue figures is enough to woo investors. But I am a value investor, so I want to see revenue together with earnings. Revenue may be growing like crazy, but if your costs are burning a hole in your pocket, your revenue doesn't matter. Here again, I am surprised to see that the company is clocking in some profits. In 2015, their net income was 15 billion renminbi. Now let's move on to cash. Ow! My value investing eyes! Negative free cash flow for 5 years. Revenue has been growing. Net income was in the black, but free cash flow is in the deep red. Second major red flag. Let's look at the management now. I know the news has been painting a very bad story about the CEO and the management, but I think we should give them a chance. Because hey, even people gave Starbucks and Apple the benefit of the doubt when their CEOs came back. Steve Jobs and Howard Schultz were able to turn their company from zero to heroes. So let's see if that's the case with Evergrande as well. I think plenty has been mentioned about the CEO and chairman, Hui Ka-yan. I'm going to talk about him last. I'll start with the performance of the group and evaluate their return on assets and return on equity. Here, I would have lost some confidence. Both ROA and ROE have been on a downtrend. ROA seems to have reached a really low level of 1.7 in 2015. And ROE is at 9.07. I like my ROA ratio to be above 10 and ROE to be above 15. If you had been following this company since 2015 till now in 2021, you would have seen that the ROA and ROE both don't really recover much. However, one thing I do admire about the management is how well diversified their properties are geographically. I would think that this is important in property development, that all your eggs are not in one city alone. Looking at this pie chart, which shows where the revenue came from in FY 2015, I would say that the company has nailed this down well. Lastly, speaking about the management, we have of course to address the dark horse. That is CEO and Chairman Hui Ka-yan. Listed under Section 1 of the interest in the shares of the company, we see one sole name under the list of directors, Hui Kai-yan. He alone holds 73.65% of shares. That's 10.162 billion shares of the company. Billion with a B. With this much ownership, there is no doubt the CEO has skin in the game. But maybe it was to his own downfall. Looking at the state of the company it is in, this is either a grand calculated move or a series of huge mistakes. But with that much ownership of the group, I don't think any CEO or chairman would want to see their company tank. Next, I'll talk about some general news of the company that I found in 2015. Apart from the annual report of the company, I usually practice reading up on any news I can get about the company. Annual reports and their websites are usually what the company wants you to see. But have others, especially finance investigators or reporters, found anything fishy about your company? Interestingly, I found this article by the New York Times which states that the company got a lifeline by Chinese banks in the tune of $16 billion. Who would have known that this story would repeat itself in 2021? Lastly, in summary, would I have bought shares in this company in 2015? I think not. Value investing principles would have steered me clear with some of the red flags out there. I would have honestly just given up while trying to understand the company and how it gets its revenue. So yeah, my risk-averse nature and my value investing principles would have saved me from watching my stocks drop by 90% in 2021. Okay, that's the end of Evergrande. I mean this video on Evergrande. I hope you enjoyed my quick analysis. Remember to hit that like button and the subscribe button. And hey, tell me honestly, would you have invested in Evergrande 5 years ago? Write to me in the comments. Bye!